Everyone, welcome to EduTap and welcome to today's Finance 360-degree session. Today's session is going to be very important for all of you as we are going to discuss the payment system report that is released by the Reserve Bank of India, and this is the first edition that the Reserve Bank of India has released for the payment system report. This is the first time that the RBI has released this report. Now many of you had the question that this is a half yearly report, so the report that will be released in the second half or the report that will be released in the later on months, that will be more important as it will be near to the examination. But let me tell you that this edition of the report is also very important because this is the first edition of the report, and here the RBI has given the 5-year analysis that how the payment system has seen the growth in our country. So this report or this edition also becomes very important, and I will tell you that which points you have to keep in mind, which are the important points from the examination point of view. The RBI has given all its payment systems that are currently working and the developments that have happened in the regulatory domain. So all of this becomes very important from the RBI grade B examination perspective, from the NABARD perspective, also from the SEBI grade A examination perspective also, because you need to have the clear idea that what payment systems are currently working in the country and how they have developed in the country. Okay, so I will tell you that which parts are important from the report and which parts you have to focus on, as this is the first edition of the report and the RBI has given a 5-year analysis which will not be irrelevant, right? Which will be very much useful in your examination. Okay, so we are going to discuss the important points of this payment system report, and this was quite in news also, and this is a very important report that RBI has recently released. So good morning to everyone and welcome to the session. So now let's move forward, and first do subscribe to the YouTube channel of EduTap so that you continue getting these relevant videos, and do join our Telegram channel where you will get the PDF of the session, and the link for the Telegram channel is provided in the description box below. So let's get started with the payment system report. Okay, so first of all, payment system report has been released by the Reserve Bank of India. So the Reserve Bank of India has published the payment system report December 2024, and this is the first edition of the report. This is the first time that the RBI has released such a kind of report, and the RBI has said that now this has become a half year ended, like this has become a biannual publication, that the RBI will be releasing this report on the biannual basis, on the half yearly basis. Okay, but this first edition is very important, as in this first edition there is the 5-year analysis that is provided by the Reserve Bank of India in regards to the growth that has happened in the payment system domain. Okay, so this report, in addition, like this report, it analyzes the trend in the payment transactions carried out using various payment systems in India during the last 5 calendar years up to calendar year 2024. So from the calendar year 2019 to calendar year 2024, the growth that has happened in the payment transactions using the different payment systems. So this has been analyzed in this report, that how the growth has happened, which instruments have actually grown, which instruments have not grown that much. So all of this analysis is provided in this first edition of the payment system report. Okay, so the 5-year analysis for the payment systems is provided, and the trend has been shown in this payment system report. Okay, as well as in addition, there is also the important developments in the payment ecosystem that is described in this report, that how the different payment ecosystems have developed in the country, and it also provides in-depth analysis into the UPI. So we will discuss all the important points that are important from the examination perspective. Okay, this report will be published on RBI website on half yearly basis now, and for the coming half the report will be released later on. Okay, so now starting with the brief analysis of the digital payment system. So first of all, over the past few years, the digital payments in India have witnessed a phenomenal growth. That is because of the spectacular progress that we have seen in the UPI ecosystem, that we have seen in the unified payment interface. Now even the kids, even the old age people, the senior citizens, they are also aware about the system, that is the UPI. They might be using it, they might not be using it, but at least they are aware that okay, there is a system that is the UPI, and the digital transactions can actually happen. The QR, like through the QR code, the transactions can actually happen. So I hope you understand that over the past few years, the digital payments in India have witnessed a phenomenal growth. If you see the data points, the retail digital payments, approximately 100-fold increase has been seen in the retail digital payments. So retail digital payments have increased approximately 100-fold over the 12 years, over the past 12 years. Okay, so if we compare from 2012-2013 to the 2023-24, okay, over the past 12 years, over the 12 years regime, there is the increase, 100-fold increase that we have seen in the retail digital payments. The remarkable growth in the payment infrastructure and payment performance, as you know that the payment infrastructure and the payment performance in the digital payment. So there is the digital payment index that is released by the Reserve Bank of India, and as per the digital payment index, there is the four-fold rise that we have seen in the last 6 years. There is the four-fold rise, that is, there is the 4-time increase that has been seen in the digital payment index. Okay, and this payment system report is taking the data for the March 2024, but as you know that the data for the September 2024 has also been released. So the digital payment index for the September 2024 was 465.33. Okay, so you can see that from March also, like from March 2024 to September 2024, the digital payments have further increased from 445.50 to 465.33. And here, using the March 2024 data, it is said that over the last 6 years, there is four-fold rise that we have seen in the digital payments in the country. Okay. Now, throughout the development of the payments ecosystem, the Reserve Bank has devoted the equal attention to not only boosting the digital ecosystem in the country, boosting the digital payments in our country, but the RBI is also focused on the safety and the security of the customers. Okay, so the RBI has also focused into the safety and security as well as protection of the customers. So two-factor authentication, that is the additional factor authentication, we can say. The OTP system was brought for the payment. So when you are making any payment, you have to like put your PIN or you have to give the OTP. Okay, there is also the tokenization of cards that was brought. That is, the instead of sending your card details, you will be sending a token. Instead of sending your card number, you will be sending a token. Okay, so tokenization of card details. So some rules or some guidelines were brought by the RBI for the safety and security of the customers. Now, in the UPI domain, there is the growth that has been seen, as well as the UPI ecosystem has further expanded. If you see, since its launch in 2016, the UPI has seen multiple enhancements. Okay, the UPI Lite was brought for the small value transactions. UPI Lite X was brought for the offline payments, for the offline transactions. If you are going to a area where the internet connectivity is not present or it is very feeble, so then UPI Lite X is for the offline payments. UPI 123 Pay was for the feature phone users. That means this people that do not have the smartphones, they can use the UPI 123 Pay in their feature phones, in their smartphones, that is the keypad phones, we can say. Okay, so UPI processes over 16 billion transactions a month. So this is the brief analysis about the digital payment system, and you can understand that these data points you can use in your answer writing, that okay, retail digital payments have approximately increased 100-fold over the past 12 years. There is, if we take the digital payment index of March 2024 as compared to March 2018, that is the base year. So there is a four-fold rise in the digital payments in the last 6 years. So this is the basic idea that the data points can be used. Okay, while the domestic payment system have become cheap and fast because of the UPI, because of the RTGS, because of the NEFT, there is the domestic payment ecosystem that has become very cheap and fast. But the cross-border payments remain the problem. They still remain the problem because our country has fast payment system. So if we go to the merchant, we can easily do the transaction. We can easily pay using the digital ecosystem. But at the global level, the transactions are still very expensive and slow. So this was recognized by the international standard setting bodies also, that yes, the ecosystem, the payment ecosystem at the global level is very slow and expensive, and we need the mechanism and methodology where the fast payment system of the different countries should be connected. That is the UPI of our country, that is the fast payment system. The UPI of our country is the fast payment system of our country, through which in the seconds we can do the payments, right? So that is the fast payment system of our country. Okay. Now, this mechanism connecting of the fast payment system is required so that at the global level also the transactions can become more fast and secure and less costly. Okay, so this is the idea. So Reserve Bank is focusing on interlinking the fast payment system of our country with the fast payment system of the other countries, so that the international or the global transactions or the transactions between India and the other countries can become more smoother and faster. And this mechanism and methodology of addressing the challenge in enhancing the cross-border payments has also been recognized by the international standard setting bodies, that yes, we need to connect the fast payment system of the different countries so that the cross-border transactions can become more smoother. Last year, the UPI and Pay Now of Singapore, UPI, that is the fast payment system of India, and Pay Now, that is the fast payment system of Singapore, were interlinked through extensive collaboration between the Reserve Bank of India and the Monetary Authority of Singapore. The recent data show that the cost of sending remittances has come down noticeably. That is, the cross-border transactions between India and Singapore have become very cheap, and the remittances have become very, like sending remittances has become very cheap. So RBI has also joined Project Nexus. I hope all of you are aware about Project Nexus. So RBI has also joined Project Nexus, that is a multilateral international initiative where this is the target, that we have to connect the fast payment system of a country with the fast payment system of the multiple other countries. Okay, so that will be linking, that will be interlinking the domestic fast payment system with the fast payment system of the multiple countries. So RBI has joined the Project Nexus. Now, payments to merchants using Indian UPI apps. So now there is also another initiative that is taken by the RBI. So the payment, if we want to do the payment to the merchant using the Indian UPI apps through the QR codes, that has been enabled in Bhutan, France, Mauritius, Nepal, Singapore, Sri Lanka and the UAE. So in various countries, our UPI apps will be enabled to send the money using the merchant QR code. Okay, so this is the brief analysis of the digital payment system. Any confusion till now? We will move forward with the legal basis now. Any confusion here, anyone? So now coming to the legal basis. So first of all, as the banking system evolved, there was a legal framework that was provided by the enactment of the Negotiable Instrument Act in 1881, and till now this Negotiable Instrument Act is still present and it is still viable for the transactions that happen through the checks or for the bill of exchange, for the promissory notes. So for all of these non-cash paper payment instrument, that is for the checks, for the bill of exchange and for the promissory notes, for these paper payment instruments, that is the non-cash paper payment instrument that I am promising after 3 months I will pay you 10,000 rupees or so. Okay, so these are the checks, bill of exchange or the promissory notes. They are the paper payment instruments that are non-cash. So for them, for these instruments, there was the Negotiable Instruments Act in 1881, which formalized the usage and the characteristics of the instruments like the check, bill of exchange and promissory note. But as there was the advent, as there was the initiation of the electronic fund transfer, India enacted a separate law providing legal foundation for the regulation of the payment system, and this act was Payment and Settlement System Act of 2007. As the electronic fund transfer started, as the NEFT, RTGS came into being. So there was the enactment of the Payment and Settlement System Act of 2007. Okay. Now for this Payment and Settlement System Act, this is under the regulation of the Reserve Bank of India, and there is the Board for Regulation and Supervision of Payment and Settlement System. This is a committee of the Central Board of RBI, of the Reserve Bank of India, and it is the highest policy making body on payment systems in the RBI, in the Reserve Bank of India. So Board for Regulation and Supervision of Payment and Settlement System, this is the highest decision making authority, this is the highest policy making authority in RBI that handles the payment and settlement system. Okay, so BBPS is chaired by the RBI governor, formulates the policies for the regulation and supervision of the payment system ecosystem in the country, and it set the standard for existing and the future systems that is authorized payment and settlement systems, determines the criteria for membership, that who all can become the payment system operators, who all can run this payment and settlement system or run the different payment and settlement system. The BBPS has also the power to reject or terminate the membership of any of the payment system operator, payment aggregator, or anyone. Okay, so this is the idea. Now the BBPS meets on the quarterly basis and it has to send a report to the Central Board of RBI on the annual basis. So BBPS is the one that is handling the payment and settlement system in the country. This is the Board for Regulation and Supervision of Payment and Settlement System under the Reserve Bank of India. Okay, so RBI regulates, supervises and licenses payment system operators, ensuring safety, security, efficiency and effectiveness of the payment ecosystem, as well as protecting the customers. Now the BBPS consists of following members, that is the Governor of the RBI is the chairperson. So the Governor of the RBI is the chairperson of the BBPS. The Vice chairperson is the deputy director, or the deputy governor. So deputy governors, out of whom, so there are deputy governors who are the members of the BBPS. Out of the deputy governors, there is one deputy governor that is chosen as the vice chairperson, of the BBPS. Not more than 3 directors of the central board nominated by the governor. So not more than 3 directors from the central board, okay, should be there. So this is the basic idea, that is BBPS. BPSS is the board that is looking after the payment and settlement system under the Payment and Settlement System Act of 2007. So this is the whole idea. Now coming to the digital payments in India, they have grown exponentially in the last decade. If you see that in the last 10 years, there is 94 times of the increase that has seen in the volume of digital payments. That is, the volume of digital payments have increased 94 times and the value of digital transactions have increased more than 3.5 times in value. So digital payments in the last decade, the digital payments have increased more than 3.5 times in the value. Okay, so volume means the number of transactions. Let's say I am doing 10 transactions. Value means that how much value is involved, how much money is involved. Okay, so in the value there is 94 times of the increase that has been seen, and in the value it is more than 3.5 times of the increase that has been seen in the last 5 years. If we only talk about the last 5 years rather than the decade, now we are talking about the last 5 years. So in the last 5 years alone, the digital payments in India have witnessed 6.7 times of increase in the volume and 1.6 times of the increase in the value. So the digital payments are drastically increasing, they are improving very, very fast. Okay, and in the coming slides we will see the analysis over a 5-year period that how the different payment systems have developed, how the RTGS, what is the growth that has been seen in the RTGS, what is the growth that has been seen in the NEFT, what is the growth that has been seen in the UPI. Okay, and I will tell you that which data you can remember, which data you can leave. Okay, so in the coming slides we will see all of these payment systems and we will understand that how they have grown in the 5-year period, okay, from the calendar year 2019 to calendar year 2024. Now let's understand about the different payment systems in India. Many of these payment systems I hope you already know about, but if you are not aware any of the payment system, I will give you a brief idea that what is the payment system. So there are different payment systems in India. One of the older payment system, or one of the very used, but it was introduced in 2004. So RTGS is the real-time gross settlement. That is the payment system that was introduced in March 2004, and since December 2020 it is available on 24/7 365 basis. That is, it is available on all days. The minimum amount, it is the real time gross settlement. So the minimum amount of the remittance or the minimum amount of transaction through the RTGS is 2 lakh rupees. Okay, so RTGS, it is usually for the large transactions. It is usually for the large payment transactions. So it is the real time gross settlement, that if you want to like send a large amount of money in the immediate basis, so then you can use the RTGS. Okay, it was introduced in 2004, and from 2020 onwards it was available on all days at all the time, and the minimum transaction through the RTGS is 2 lakh rupees. Coming to NEFT. NEFT is the National Electronic Fund Transfer. It was introduced in 2005. Since December 2019, it operates on all-day basis, on 24/7, 365-day basis. And the NEFT, it is not happening on the real-time basis. That means, in the case of NEFT, there are the accumulation that happens. So let's say I want to make a payment of 10,000. Someone wants to make a payment of 20,000. Someone wants to make a payment of 15,000. Someone wants to make the payment of 1 lakh rupees. Someone wants to make the payment of 1,70,000 rupees, and so on and so forth. Okay, so all these transactions that we want to send, let's say we want to send it to the account of Yes Bank. Okay, we want to send it to the account of the Yes Bank. So all these transactions will be accumulated, and the batch wise transaction will happen. That is, the transaction is not happening on the real time basis. It is happening on the batches. Under the NEFT, the transaction happens in batches. That is, in the half-hour batches. So in total, in a day, there are 48 half-hour batches, and your transaction will be sent in a batch. Okay, so this is NEFT, that is the National Electronic Fund Transfer. If you if you do not have any immediate need for sending the money, you are ready to wait for half hour, that is fine, then you can send the money through NEFT. And in the RTGS, there is the minimum transaction value, that is 2 lakh rupees, but in the NEFT there is no minimum transaction value. Okay, so in the NEFT there is no minimum transaction value. So RTGS and NEFT, I hope you are clear about both of them. RTGS is the real-time gross settlement. NEFT is National Electronic Fund Transfer. RTGS is for the large value transactions, and the minimum amount to be sent under RTGS is 2 lakh and above. Under NEFT, there is no minimum transaction value, but in the NEFT, there is half-hourly batches in which the money goes to the different accounts. Now coming to NASH. So National Automated Clearing House, basically the National Automated Clearing House, I hope many of you know about this, but if you do not know about this, so this National Payment Corporation of India, that is NPCI, this has implemented the National Automated Clearing House for banks, for financial institutions, corporates and the government. So the corporates, the government, they send huge amount of money to different accounts, as well as they collect huge amount of money from the different accounts also. So for the facilitation of the interbank high volume electronic transactions which are repetitive and periodic in nature, this NASH was introduced. This system was introduced for the bulk payments. Okay, like the government sent the subsidies, like the LPG subsidies for the LPG cylinders, the subsidies are sent to lakhs of households. So the bulk payments have to be made to a lot of accounts. So this bulk payment can happen through the NASH. Now there is the collection. So mutual funds, they are collecting the SIPs from, they are collecting the money from a lot of investors. So the money is collected from a lot of accounts by the mutual funds. So this collection of money can happen through the NASH also. So if the bulk settlement has to happen, if the bulk payments have to happen, then also the NASH system can be used. If the bulk collection has to happen, then also the NASH system can be used. Okay, so this is the basic idea of the NASH system, that is for the repetitive and periodic settlements, and for the repetitive and periodic collections the system is introduced. So NASH system can be used for making bulk transactions towards the distribution of subsidies, dividends, because let's say CDSL, we are talking about an entity, Reliance Industries. It has lakhs of investors, it has lakhs of shareholders. So dividend has to be paid to all the shareholders. So this payment, this distribution of money can be done through this system, as this is a bulk distribution that has to happen. Okay, so subsidies, dividends, interest, salary, pension, etc. can be paid through the NASH system, because these are the repetitive periodic bulk payments. As well as the collection of payments can also happen through the NASH system. The collection of payments for telephone, electricity, water supply, the investment in mutual fund, insurance premiums. So this is the NASH system. I hope this is clear that the NASH system, this was launched in 2016 for facilitating automatic clearing of interbank high volume electronic transactions which are repetitive and periodic in nature. Now coming to IMPS. Now all the blue ones, they are under the RBI. So the RTGS and NEFT, they work under the RBI. The green ones, that is the NASH, IMPS, UPI, they work under the NPCI, the National Payment Corporation of India. So IMPS, this is the immediate payment service, that is on the immediate basis you can send the money. Okay, this was introduced in 2010, and India was the 4th country to introduce such a system. So before India, South Korea, UK and South Africa have already launched this kind of system. Okay, so India is 4th country to launch such a system. Now IMPS supports different kind of initiators for the transaction, that is transaction channels. There are different transaction channels that through which the money can be sent, like the mobile devices, the internet, ATMs and even bank branches. Okay, so IMPS is the immediate payment service that was launched by the NPCI. Now UPI, you all know that the UPI was launched in 2016. This is like through the UPI apps, through the applications, through the third-party applications, you can send the money up to the limit of 1 lakh rupees. So UPI is under the NPCI. Now cards. So some cards, let's say RuPay card, this is launched by the NPCI, but there are other card networks like the Visa and such, they are run by other payment system operators. Okay, so now in the case of cards, there are debit cards and there are the credit cards. So if we see the debit cards, the transaction through the debit cards has actually reduced in the past 5 years, while the transactions through the credit card has improved a lot. So cards, while the use of debit cards has declined, the transactions through the debit cards have declined, while the credit cards have grown more than 15% on the year-on-year basis in the recent years. Okay, and there are cards that work on the RuPay network, that is the network of the NPCI, while there are other cards also that work on the network of the other payment system operators such as Visa, American and such. Okay, so these are some of the ideas. Now PPI is also launched by other payment system operators, like there is the prepaid payment instrument, that is the wallets that are under the Paytm, like there are Paytm wallets, PhonePe wallets and such. So the other payment system operators, they can launch the PPIs, the prepaid payment instrument. So in 2009, the RBI issued guidelines to ensure orderly development of the prepaid payment instrument ecosystem. Now next is TREDS. So TREDS is the Trade Receivables Discounting System platform. So this we have discussed in the recent time only, in the recent few past lectures. The TREDS platform, through this the financing can happen, the money can be given to the MSME for their bill of exchange. So let's say the MSME, the micro, small and medium enterprise, it has some bill, okay, that the buyer has bought the product, but the buyer will give the money after 2 months. So this is the bill of 1 lakh rupees. So now the MSME can go to the TREDS platform, to the Trade Receivables and Discounting System platform, and the MSME can ask for the money. Okay, so this is the TREDS platform. So we will discuss more about it in the coming slide, but this is the basic idea. So TREDS platform is also operated by the other payment system operators. So there are 5 TREDS platform. So that is Credex, RXIL, Invoice Mart. So there are different MSME, like there are different TREDS platform that is authorized by the RBI. Okay, so they are run, the TREDS platform is run by the other payment system operators like the Credex, RXIL and such. Now coming to the checks. So there is the check truncation system that was introduced. So check truncation system, this was introduced by RBI in 2008, and the check, like before, what happened that the checks had to be sent in the physical form for their clearance, but through the check truncation system there was the images that used to be sent for the check clearance. Okay, so check truncation system enables use of the image of check, thereby eliminating the need for physical transfer of the checks or the physical movement of the checks. So before, the physical movement used to happen of the checks for check clearance, but now just image has to be sent of the checks for the check clearance. Okay, now coming to BBPS, so this is also under the NPCI. So BBPS is the Bharat Bill Payment System. So pilot phase of the Bharat Bill Payment System was launched on 31st August 2016, and through this BBPS you can send the money, or you can like pay the bills, the water, for the electricity, for the telephone, the different bills can be settled through this Bharat Bill Payment System. So Bharat Bill Payment System offers anytime, anywhere interoperable bill payment service. Now coming to the NETC, that is for the toll payment. So National Electronic Toll Collection, through this system the toll collection can happen, like the fast tags are also deployed under the NETC. So there are the fast tags that has a QR code. So just from this the money is deducted when you are going through the toll. Okay, you do not have to give any cash payments or such. So National Electronic Toll Connection, this offers an interoperable nationwide toll payment solution, and it also enables the deployment of the fast tag. Okay, next is your AEPS, that is Aadhaar enabled payment system. Till now any confusion anyone has? Till now any confusion anyone has? So AEPS is the Aadhaar enabled payment system. Okay, this started in 2011. It offers two key services. So there is the Aadhaar enabled payment system. So through this what can happen, you can do the fund transfers or you can do the cash withdrawal. So how through the Aadhaar enabled payment system? So see, there are business correspondents of the bank. Like the insurance companies have the agents, similarly the banks have the business correspondents. The business correspondents are the agents, we can say, or they are the intermediaries that are the extension of the branches of the banks. Okay, so business correspondents can be anyone. Okay, the bank, let's say, has connected to some merchant, has connected to some kirana store and has provided them some instruments. Okay, so business correspondents can be anyone authorized by the bank as their extension. So APS is the Aadhaar enabled payment system. Now let's say that there are some people that are going to a kirana store, that is actually the business correspondent of a bank branch. Okay, so now through this business correspondent the fund transfer can happen, the cash withdrawal can happen. If the person wants to do the fund transfer or if the person wants to do the cash withdrawal, the person can do so, because let's say the branches, the bank branches are very far off. The ATMs are not available in that area. Let's say it is a rural area where the ATMs are not available, the bank branches are not available. So the bank as the extension has provided some instrument to this business correspondent, that are the kirana stores in the area or the different stores in the area. So they have become the business correspondent of the bank. So through this business correspondent, the people of the area can have the fund transfer facility or the cash withdrawal facility. Okay, just the Aadhaar card has, like, Aadhaar card number has to be told and some biometric has to happen, so that it can be known that okay, this Aadhaar card is linked with this bank account and from this bank account the money will be transferred. For the security, the biometric has to be taken of the person whose account number it is, whose Aadhaar card it is. Okay, so this is Aadhaar enabled payment system, that is through the Aadhaar card, through your biometric, because your Aadhaar card, because your Aadhaar number and your biometric is connected with the bank account, that you have. Okay, so you are giving the Aadhaar number, you are giving your biometric, so through the bank, like from the bank account, the cash withdrawal can happen through the business correspondent or the fund transfer can happen. Okay, next, so this is one of the facility under the AEPS in the areas where the bank branches, ATMs are not present. From there the business correspondents can help in the cash withdrawals and the fund transfer. Now there is another facility, that is the Bhim Aadhaar Pay. Let's say you are going to a merchant You are going to a merchant, you do not have any cash, you do not have the UPI, you do not have any cards also. Now you are saying that, okay, I have my Aadhaar number, okay, and my thumbprint, or of course your Aadhaar number is connected with your bank account. That means your biometric is also connected with your bank account. So the merchant has the Bhim, the merchant has the Bhim Aadhaar Pay. The merchant has the Bhim Aadhaar Pay. So what happens that this Bhim Aadhaar Pay facility is provided to the merchants, so that the merchants, for their transactions that they are doing, for their products that they are selling, the merchants can take the payments by taking the biometric and by taking the Aadhaar number of the person. Okay, so this is the idea, that this Bhim Aadhaar Pay facility, this is for conducting the transactions using the Aadhaar linked bank account and by providing your biometric at the merchant location, and this can be done by the customers only at the merchant location. So Aadhaar Pay. Now the AAPS, there are two key services. AAPS, that is through the business correspondent, you can have the cash withdrawal or you can have the fund transfers. Through the Bhim Aadhaar Pay, you can go to the merchant location and there you can buy anything, and through the bank account, even without having UPI, even without having cards, even without having your cash, just you have your biometric, just you have your Aadhaar number. So you can give your Aadhaar number, you can give your biometric, and the merchant like payment will happen. Okay, so these are the payment system in India. If there is any confusion, you can ask me. Now coming to the major regulatory developments and payment system in India. So first of all, the regulation of intermediaries in payment ecosystem. So there are the payment aggregators. Like if you are going to Amazon, if you are going to Flipkart, if you are going to Meesho, if you are going to any e-commerce platform, when you are going to the payment section, they are providing you the payment through different means. You can pay through your UPI app, you can pay through Google Pay, Phone Pay, Paytm and such. You can pay through your cards, you can pay through your debit card, you can pay through your credit card also, you can pay through your wallets, that is the prepaid wallets that you have. So they are providing you so many of the facilities. The Amazon, it is just a e-commerce platform. The Flipkart, it is just a e-commerce platform. So how they are able to take the money from so many different instruments? For that, there are the payment aggregators. So payment aggregators, they connect with the e-commerce platform, and the payment aggregators, they provide the facility that through the payment aggregator facility, there are different payment ecosystem that can be connected to the e-commerce platform. Okay, so payment aggregators are there that help the e-commerce platforms to take the money, from through different payment systems. Okay, so with the rapid expansion of the digital payments in India, a variety of non-bank intermediaries have emerged. Payment aggregators, they were brought under the regulatory domain of RBI because the payment aggregators, they provide the system through which the e-commerce platforms and the different platforms, they can take the money through the different instruments. So payment aggregators were important because they are providing the facility, they are connecting the merchants or the e-commerce platforms through the different payment systems. So payment aggregators were important. That was recognized by the RBI, and RBI released some regulations for the payment aggregators, that were the online payment aggregators, and they were said to be the payment system operators. So payment aggregators were provided the designation of the payment system operators. Okay, so here you can see there are different payment aggregators, Razorpay, Amazon Pay. There are different payment aggregators that are provided the designation of the payment system operators. Later on, all entities facilitating cross-border payment transactions, they were also brought under the directions by the RBI. So they became the payment aggregators for the cross-border, and the entities, they have to follow the regulations of the RBI. Okay, so if there are the entities that are facilitating the cross-border payment transactions for the import and export of the goods, they can do so, but they are brought under the direct regulation of the RBI, and they have to follow the directions of the RBI. Okay, next regulatory development in the payment system was the card on file tokenization. Okay, so Reserve Bank of India said that what is happening are card details, your card number, your CVV, your maturity date of the card, these all information is going to the merchants, is going to different merchants, Amazon Pay, Netflix, it is going to different platforms. So it is a problematic thing because your details are going out and the fraudsters, they can use your details for taking out the money. So it was said that we have to tokenize the card details. We have to tokenize the card details, that instead of giving your card number, you are like putting your card number and this card number will get tokenized. That means this card number will convert into the token and this token will be sent to the merchant. So this was the card on file tokenization. So before there was the device tokenization that was brought, that in your device, in your laptop, in your mobile phones, you are converting your card number into a token. Later on there was the card on file tokenization that was brought, that whichever platform you are going to Amazon, you are going to Flipkart, you are going to Netflix, you are going to Meesho, you are putting your card details, they are automatically getting tokenized when you are applying for it. Okay, so that is card on file tokenization. So device tokenization, you are tokenizing the card details in your device. Card on file tokenization, you do not have to tokenize your card details in the device. Whenever you are going on a platform, you just have to put your details, you just have to allow for tokenization and it will automatically tokenize. So this was the idea. Now as a result, nearly 98% of e-commerce transactions are now processed without using the actual card data because the tokenization is being accepted by the people. Okay. Next is arrangements with card networks for issue of credit cards. Before, the card networks like Visa and Diners Club, they used to have the agreements with the credit card issuers or the banks. Okay, so the card networks used to say that we will have the exclusive connection with the credit card issuers with the banks, but the RBI said that this kind of agreement should not be signed by the banks because then you are curtailing the options for the customers. So a circular was issued on March 6, 2024. Credit card issuers were not to enter into arrangement or agreement that is providing the exclusive benefit to the card network. Okay. Further, the card issuers with more than 10 lakh active credit card issuance shall provide their eligible customers with an option to choose from multiple card networks. So basically it was said that the credit card issuers, they should not connect. The credit card issuers, they should not connect with the card network, with a single card network. That means credit card issuers, they should not come into any exclusive agreement with the card network. And if the credit card issuers, if the bank is a very big bank that is having many credit card issuance, so the credit card issuer has to provide the option to the customers. Okay, multiple option has to be provided to the customer. So now coming to the next one, e-rupee. So I hope you have heard about e-rupee vouchers. They are the digital vouchers. So before there were limits that were there, that was later on enhanced. Okay, so the e-rupee vouchers, they are the digital vouchers that can be given for a particular use case, that you are giving this e-rupee voucher to be used for the medical bills or something. Okay, so there are some companies that give the e-rupee vouchers to be used in the chemist shop only, to be used for the doctor health facilities only. Okay, so before, the e-rupee vouchers were earlier permitted to be issued by banks for the government use cases, limit of 1 lakh rupees, and to a limited extent for the corporates with the limit of 10,000. Later on, this limit was increased, enhancing the limit of vouchers issued for corporates use cases, that corporates can use the e-rupee vouchers and can provide the e-rupee vouchers to its people, to its employees. This limit was increased from 10,000 to 50,000, as well as enabling issuance of e-rupee vouchers for individual use cases with a purpose specific limit of 10,000 rupees. So even the individuals can now provide the e-rupee vouchers with a limit of 10,000 only, and this should be non-reloadable. That means if the individual use cases, for the individual use case, e-rupee voucher is released, so this should be non-reloadable. Reloading of e-rupee vouchers for corporates can happen. This is permitted now on par with the government use cases. So the limits were increased for the e-rupee voucher. Now coming to the TReDS platform. So in 2023, there was the extension of the TReDS platform that happened. So first of all, the trade receivables discounting system. This system was launched by the RBI in 2014, and it was said that different operators will operate the TReDS platform. So there is the RXIL, Invoice Mart, there is the C2O, as well as there is the CredX that operates the TReDS platform. So there are the 5 operators. There are the 5 different operators that operate the TReDS platform now. Okay, so based on the experience that was gained by the RBI and in the economy, it was said that we are expanding the scope of the trade receivables discounting system, and we will allow the insurance companies in the trade receivables discounting system. We will also start the secondary market in the trade receivables discounting system. So through the trade receivables discounting system, the MSMEs, the micro, small and medium enterprises, they can get access to the immediate money against their bill of exchange, against their bills. Okay, so this is the idea. Now in the TReDS platform, the MSMEs are allowed, that are the sellers. Okay, the buyers can be any corporate or any government entity and such. Okay, and there are the financiers that are actually financing the MSME, that are actually giving the money to the MSME. And the fourth, so these are the 3 entities: MSME, the buyer and the financier. The fourth entity was the insurance companies that were allowed in the TReDS platform to insure the financiers, okay, to provide the insurance to the financiers, because the financiers were giving the money to the MSME. So this is the idea. Okay, so if you want to know more about the TReDS platform, it is a very, very big topic. So I have taken a session on it. You can go and see that. Okay, but there was the expansion that happened of the TReDS platform. The insurance companies were allowed in the TReDS platform, and the secondary market was also allowed in the TReDS platform. Now coming to the next topic, that there was the enablement of offline digital payments. So UPI Lite X was introduced for the enablement of the offline digital payments, so that if you are going to an area where the internet connectivity is not very strong, so you can use the UPI Lite X for the offline payments. Now enhancement per transaction limit. So for the UPI Lite, there is the per transaction limit that has been increased from 500 rupees to 1000 rupees. Okay, operationalization of pre-sanctioned credit lines on UPI. So it was said that UPI, till now it is connected with the debit cards, till now it is connected with your saving account, but it was said that the UPI will now be connected with the credit cards also. That is, on credit you can take the products using the UPI. Okay, so instead of taking your credit card, you can connect your credit card with the UPI, and through the UPI you can use your credit card facility also. So before it was said that the credit cards that are issued, or the scope of UPI was expanded by allowing the pre-sanctioned credit line. Or see, there are some banks that allow for the pre-sanctioned credit line. Like let's say you have a very good history with the bank, you are depositing a lot of money with the bank. So banks seeing your deposit history, banks seeing your transaction history, banks allow some pre-sanctioned credit line, that okay, this is pre-sanctioned credit line. If your account is getting finished, you can use up to 1 lakh rupees extra, or you can use up to 2 lakh rupees extra, or you can use up to 5 lakh rupees extra. So this is the money that you are taking extra from the bank. This is the pre-sanctioned credit line, seeing your previous history with the bank. Okay, so this is pre-sanctioned to you, seeing your history. This is pre-sanctioned to you at a very low interest rate. So UPI was the UPI facility was expanded, and it was said that this pre-sanctioned credit line will be connected to the UPI, and so pre-sanctioned credit line to be linked through the UPI and used as a funding account by scheduled commercial banks, excluding the payment bank, small finance bank and regional rural bank. So this was said that only the scheduled commercial bank, excluding the small finance bank, excluding the regional rural bank and payment bank, so excluding these banks, only the other scheduled commercial banks can provide this pre-sanctioned credit line facility through the UPI. Now it is said that even the small finance banks are permitted to provide the pre-sanctioned credit line on the UPI. So this is the basic idea. Okay, that operationalization of the pre-sanctioned credit line. So there are the banks that provide the pre-sanctioned credit line to the people that have good history with the bank. Okay, so the scope of UPI was expanded by permitted the linkage of RuPay credit card by linking the UPI with the pre-sanctioned credit line. Okay, now the small finance banks also to extend pre-sanctioned credit line through the UPI. So this is the basic idea. Now coming to the next point, that is payment PIDF. I have explained you this, and for this you have to see the whole session on the PIDF. This is a very important scheme of the Reserve Bank of India, that is Payment Infrastructure and Development Fund. So this is the session that you have to see. PIDF, there was the extension of scheme. The scheme was extended from 3 years to 5 years. The inclusion of PM Vishwakarma scheme beneficiaries also happened in PIDF. Now coming to e-mandate. So e-mandate, you know that there is the mandate that you have given that automatically every month 199 rupees will be deducted from your account for your Netflix subscription. Every month 250 rupees will be deducted from your account automatically for your Jio subscription or for your subscription. Okay, so these are e-mandates that you have authorized. So it was said that the e-mandates up to 15,000 rupees will be allowed without, like, the limit of execution of e-mandates without additional factor authentication, without the additional like OTP and such. So the limit of e-mandates without the additional factor authentication was 15,000 rupees. But later on its limit was increased from 15,000 rupees to 1 lakh rupees. Now this 1 lakh extension was given for only the mutual fund payments, for only the payments of the insurance premium and the payments of the credit card bill and such. So now the limit of the e-mandate was increased from 15,000 to 1 lakh. This 1 lakh limit on the e-mandate without the additional factor authentication, this was for these purposes. Okay, so basically e-mandate can be allowed without the additional factor authentication up to the limit of 15,000. Okay, because you do not want to go through the hassle of going through the additional factor authentication. You know that every month you want for your Netflix or for your Hotstar subscription, you want the money to be deducted without any hassle. So up to 15,000 of the limit, there is no requirement of the additional factor authentication for the e-mandate. Later on, the limit was increased to 1 lakh rupees. This was specifically for the limited user cases, that is for your insurance premiums, for credit card bills, for your mutual fund subscription and such. So for that, the e-mandate limit was increased to 1 lakh rupees. That is, this much amount can be deducted without the additional factor authentication on your e-mandate. Okay, so this is the idea, that the 1 lakh rupees of the limit was introduced for the exemption of the additional factor authentication for these particular things. Now enhancing the UPI transaction limit for specified categories. So it is said that the UPI transaction limit is 1 lakh rupees. Okay, that is, in a day you can only transact up to 1 lakh rupees. But the limit was increased for specific use cases. So currently also you can on a single day, if you want to send the money through the UPI, you can send only up to 1 lakh rupees. But for the except for a few categories, for the capital market, mutual funds and such, for the collections, EMI collections, loan repayments and such, the limit was increased to 2 lakh rupees. That means if you are paying for the credit card, if you are paying for the mutual fund and such, for that the limit is 2 lakh rupees. Okay, for that the UPI transaction limit is 2 lakh rupees. Now the transaction limit for UPI payments for retail direct scheme and for the initial public offer subscriptions was increased to 5 lakh rupees, and this 1 lakh rupees, this limit of 1 lakh rupees was increased to 5 lakh rupees for the medical and educational services also. So for the normal transactions, the UPI limit is 1 lakh, but for special categories, the limit is 2 lakh. For other special categories, the limit is 5 lakh. That is for the IPO, for the initial public offering, for the medical services, for the educational services, for the retail direct scheme. For such 4 categories, the limit was increased from 1 lakh to 5 lakh through your UPI transaction. Okay. So this is regarding the UPI. Now you know that how important the UPI is. So I am going to briefly tell you the improvement that has happened. So the UPI has been the most significant contributor to the growth of digital payments in India. Its contribution to digital payments volume. So digital payments volume, in the total digital payment volume, the contribution of UPI is 83% in calendar year 2024, and in the contribution in the digital payment volume, this has increased with a compounded annual growth rate of 74% over the 5 years. That means the UPI has increasingly being more involved in, has been increasingly providing more contribution in the digital payment volume. Okay, so the compounded annual growth rate, that means the total annual growth rate in the compounded form for the 5 years was 74%. Now, if you see for the UPI, so this is UPI contribution in the digital payments. This is the UPI contribution in the digital payments that has increased, that is currently 83%, and the CAGR is 74% in the digital payment volume. But if you see UPI as a standalone thing, then the UPI in the volume, in the 5-year compounded annual growth rate of the volume of the UPI transactions is 89.3%. That is, the UPI transactions have increased in volume in the past 5 years with the annual growth rate, with the compounded annual growth rate of 89%, and the value, the UPI transaction value has increased with the compounded annual growth rate of 86.5%. That is the basic idea. So compounded annual growth rate means that this is the growth rate, the average growth rate in the past 5 years. So the average growth rate in UPI in the past 5 years in the volume of transaction was 89.3%, and the compounded annual growth rate or average annual growth rate in the 5 years in the value of transactions through UPI was 86.5%. Okay, now you can see that the total volume of transactions, was very high in the P2M, person to merchant category. So the volume of transactions, the number of transactions were very high in the merchant category, person to merchant category. But if we see in the value case, there was more value that was transacted between person to person. Okay, so person to merchant, there is more volume of transactions that is happening. Person to person, there is more value of transactions that is happening. Okay, so this is the idea. Person to person through UPI, higher value transactions are happening, while person to merchant transactions through UPI, there is more volume of transaction. Volume means number of transactions. Let's say 1,000 number of transactions are happening, and each transaction is of the value of 1 lakh and above, let's say, or 70,000 and above, let's say. So value means the value of a single transaction, or the value that is transacted. Volume means the number of transactions. Okay. Now, analysis of payment system data. So the total payment system, it has witnessed remarkable growth in over last 5 years. The value of payments grew with a CAGR of 9.8% in the last 5 years. So in the last 5 years, the value of payments through the total payment system has increased by 9.8%. Okay, in the compounded annual growth rate. The transaction volume, so this was value, the volume has surged by 45.9% of the CAGR. So the compounded annual growth rate, for the digital payment transactions, for the value of the volume of the transactions, was 45.9% for the last 5 years. Okay, and this growth highlights the rapid digital transformation in India's payment ecosystem, because the value of the payments have grown through the digital transactions. The value of the transactions that are happening, that has grown by the annual growth rate of 9.8% in the past 5 years, and the volume of the digital transactions have grown by 45.9% in the past 5 years. Okay, now this is the CAGR the transaction value growth and the transaction volume growth. So you can see that the value growth has happened and the volume growth has happened. That is, the transaction value has increased through RTGS, NEFT, through the UPI system, and the transaction volume has also grown. So these are some data points that you can see, that is UPI system, through the UPI system and through the Bharat bill payment system, they both have seen a huge growth in the value of transactions, also in the volume of transactions also. Okay, so this is the basic idea. CAGR, you can see, if you remember, you can remember to write it in your answer writing. Otherwise, a direct question is not expected from this, but you can remember some data points for your answer writing. Okay. Now RTGS, it is like the NEFT and all the other systems, these come under the retail payments. Only the RTGS, it doesn't come under the retail payment, because this is usually done by the corporates for the large value transactions. Okay. Now coming to the card, you can understand that from December 2019, the credit cards have increased in numbers from 5.5 crores to 10.8 crores. That means the credit cards have nearly doubled. The credit card issuance has increased by a lot. While in the debit card case, if you see, the debit cards have increased from 80.5 crores to only 99.1 crores. So the debit card issuance is not very much. It is increasing, but not very much. As well as when you see the credit card in the volume terms and in the value terms. So the line is for the volume. So the credit card transaction volume, the transaction volume, the number of transactions through the credit card has increased, as well as the credit card transaction value. Credit card transaction value has also increased. While in the debit card case, the transaction volume has decreased, the number of transactions through the debit card has decreased. So transaction volume has decreased, as well as the transaction value through the debit card has also remained low or stable at a lower level. So the 5-year compounded annual growth rate of 16.47% in transaction volume through the credit cards and 23.37% in value, the transaction value. Debit cards have experienced a decline in transactions, relatively modest 5-year CAGR of 18.89%, that is in negative, that is volume has declined through the transaction volume through the debit card has declined. The value if we see the CAGR, the compounded annual growth rate of past 5 years, so we can see the value of transaction through the debit card has also declined, but by 5.48%. Okay, so the inward and outward remittances, the India remains the top recipient of the global foreign remittances with a record of 129 billion inflow in the calendar year 2024. After that, after India, there was Mexico, but India is the largest recipient of the global remittances from all over the world, and Mexico, the second highest recipient, only received 68 billion. That is nearly half of what we received. Okay, so this is the inflow of the remittances. So India has the highest inflow of the remittances. We are getting the highest money from all over the world. After that, there is Mexico. After that, there is China. After that, there is Philippines, and after that, France. So these are the top 5 countries in terms of inward remittances. So outward remittances, the remittances went out maximum from US. So US is the country from which the maximum remittances went out. So outward remittances were highest from US. Okay. Now coming to the last slide. So this is, we are towards the end of your session. So various efforts have been taken for UPI, for the expansion of UPI, that we have discussed in the starting only. But in the case of RuPay credit card, we want our RuPay cards to be expanded also. So acceptance of Indian RuPay cards has been enabled in Bhutan, Nepal, Singapore, Maldives, Mauritius. So RuPay credit cards, RuPay cards, they are the cards that were originated by the NPCI. RuPay cards are the, RuPay network is the domestic network of our country. So we want the RuPay network to expand, right? So acceptance of the Indian RuPay cards has been enabled in Bhutan, Nepal, Singapore, Maldives, Mauritius and the UAE for use at ATM and POS terminals. Issuance of RuPay cards have also started in Bhutan and Mauritius, that they have started issuing the RuPay cards also. Further, Indian RuPay cards in co-badging. So Indian RuPay cards are collaborating with the different other networks, like the Indian RuPay cards, they are collaborating with the Japan Credit Bureau, that you can see JCB. So Indian RuPay card are collaborating with the different credit networks to become more internationalized. Okay, so further, Indian RuPay cards are collaborating co-badging arrangement with Discover Financial Services, Diners Club International, Japan Credit Bureau, Pulse and China Union Pay are accepted in 200 plus countries across the globe. So Indian RuPay cards, they are collaborating, or Indian RuPay network, they are collaborating with the other networks, other card networks, so that they can become more internationalized. As per the MOU signed between the Reserve Bank of India and the Central Bank of the UAE in July 2023, Central Bank of UAE has developed the domestic card scheme, that is JMAN, based on RuPay technology. So we have allowed the Central Bank of UAE to use the RuPay technology to launch their own card network. So you can understand that how well our card network and the technology used is, that even the other central banks want to use the same network. Okay, so this is regarding the card. Any confusion anyone has till now? Is it all clear? See, the compounded annual growth rate, it is for the volume of transactions and it is for the value of transactions. Okay, so through the RTGS, what is the compounded annual growth rate of the past 5 years for the volume transactions? That is, the transactions volume has increased by what growth rate in past 5 years, and the value, the annual growth rate, the compounded annual growth rate for the value of transactions through the RTGS in the past 5 years. So whenever you see the CAGR, that is for the volume and value both. Volume means number of transactions and value means the amount of transaction. Okay, so I hope you can understand this. So for the UPI also, we have discussed the CAGR. Before we discussed the CAGR in terms of contribution of UPI in the digital payment volume. Okay, so this is different. That is the compounded annual growth rate. It is the growing contribution of UPI in the digital payment system. Okay, that is by a growth rate of 74%. But if we see the UPI as a standalone without seeing the contribution, if we only see the UPI transaction volume, so that has grown by 89.3%. and if we see the transaction value growth of the UPI, so that is by 86.5% in the past 5 years. Okay, in the 5 years, this is the compounded rate. Okay, for the total payment system, for the value of payments through the digital ecosystem has the compounded annual growth rate of 9.8%. The compounded annual growth rate of the transaction volume through the digital payment system is 45.9%. Okay, now the growth rate of the transaction value through the RTGS, NEFT, UPI, IMPS, BBPS, that has grown in the past 5 years from calendar year 2019 to calendar year 2024. So if we see that from the calendar year 2019 to calendar year 2024, there is the growth that has happened in the transaction value through the RTGS, NEFT and such, and there is the growth that has happened in the transaction volume through the RTGS, NEFT and such. Okay, so transaction volume, that is number of transactions, have increased through RTGS, NEFT and other system. The transaction value, that is the amount of value that has increased through the RTGS and the NEFT and such, they have also grown, and this is the compounded annual growth rate, that is the annual growth rate that is compounded for the 5 years that is taken. Okay, so all of this we have discussed, but still if you have any query, any confusion, you can comment down below and ask me the questions. So this is the first question. I hope you will be easily able to answer this question, and this is the second question, so do try to answer this question. Okay, so these are the 2 questions. I hope you will be able to answer the question. So the session, everything is clear? Any confusion anyone has, any problem anyone has? So I have brought the important data points. Many of the data are given in the report, but just focus on the important overall idea, because the overall idea is what is required. Okay, here. Any confusion, anyone? No confusion? Yes. So in the for the last classes, I will comment the answer in the last class only. Okay, so whoever has given the right answer, I will comment in their section that okay, it is the right answer, so that the other students can also see. Otherwise the session will stretch if I bring the previous questions again. Okay, Guru Raja and Happy, I will comment in your answers only. I will comment that you have given the right answers or not. Okay, and in the comment section of the previous session, I will give the answer that okay, this is the answer. For this also, whatever answers, like, do give the right answer of the homework question, and whoever gives the right answer, I will just comment that okay, this is the